Please welcome to the show, President of Blue Line Futures, Bill Baruch. He's in Chicago. Bill, I bring those points up because I've been harping on about the fact that I think that such a large part of our problem in inflation is energy, right? Our energy policy has turned its back on coal and fossil fuels, period. That's made things expensive as we've gone to, they're trying to push us to wind and solar renewables before we're actually ready to go there. And my argument has been, it's just those two words. They're trying to make it a revolution over to renewables, where I say that's something more of like an evolution. Show the consumer it's a better idea. They'll migrate slowly when they're ready. When you try to push us, all that really does is push us to something that doesn't work as well. We want to go back to something that did. There's not new investment in it. They've shut some things down. It's scarcer, which makes the price go through the roof. So now we just have higher fossil fuel energy and nobody's using the renewables. Now, that's a mouthful to say that I think that the reason why we've got such inflation in this country right now is because of 50% year-over-year gas prices. Some say it's even more than that. We just hit a 7-year high in crude, and crude's up again today. If we had that taken out of the wind of the sails of the inflation people, I think that that number would be lower, maybe a lot lower, because inflation, energy is in everything we do, from making it to wearing it to transporting it to whatever. And I think that maybe that wouldn't have to embark upon this aggressive interest rate hike policy that's going to hurt everybody, make everybody pay for maybe an energy policy that's been a little bit too Green New Deal-ish, a little bit too early-ish, if you get my drift. What do you think?
Yeah, I mean, they've moved on this where it's really, I mean, they need a 50-year timeline to make some of these green moves.
Right.
And yeah, I don't even really know the intricacies so well, but there is some credit stuff that's going on within those energy credits that you're being forgiven for certain things and not forgiven for others. It's all smoke and mirrors. The reality is, and we put this on our YouTube channel, Blue Line Futures. Energy Transfer is a company that, and we have some exposure to at Blue Line Capital. But Energy Transfer put a commercial out. It would premiere during the halftime or during the national championship game a couple of weeks back, and it shows like every little product that people are using throughout their day. You know, from lip gloss to your keys, the remote keys to your car. Every little thing is really coming from petroleum. If you start shutting down petroleum and the energy companies that provide it, then you're going to crunch energy, and that's what we're seeing. And we can see energy. I mean, I've been calling for crude oil, moving $100 to by middle of this year. And if this gets ugly, I mean, I remember the days when we were running $150, and we could see some crazy moves. But the reality, you got the Biden White House. They come in, they start pressuring the Keystone Pipeline. Just a couple weeks ago, the Keystone Pipeline had some issues, and you saw Cushing draw down significantly. You're just seeing that over a 2-week span. You're seeing the physical market tighten up extremely. What they need to do, they need to support and bring a tailwind to these energy companies and allow them to produce. They're starting to wake up to it right now. But at the end of the day, they're also doing things like trying to bring in a banking chief right now that's going to want to take away credit from these energy companies, meaning they're not going to be able to have cash liquidity to produce and find new wells and
Right.
explore. It's pretty wild, some of the policy that you're seeing here right now, not just in the U.S., but around the world.
Yeah, I couldn't agree with you more. And another thing that really that I can't stand is the fact that it's become almost a woke issue, right? I mean, look, we used 10% more coal last year than we did the year before, and we're going to use another 10% more this year than we did last year. Okay, coal's not going away, even though it's tripled in price in some cases. We've used a lot more of it. Number one. Number two is this push to be woke when it comes to these fossil fuel companies. I wrote down a couple 3 things here. Some of these banks aren't taking cash deposits from some of these energy companies anymore. They don't want to have anything to do with them. I'm sure you've heard that. And another thing is that some of the largest hedge funds out there have banded together and pledged not to own their stock. So now you've got no investment as far as stock ownership. You can't put your cash in. It's almost like they're a marijuana company now, right? And then lastly, then you take that on board as a CEO of some of these energy companies. Oh, we're not going to plow money into reinvestment. You're going to be looking at other ways of making money because this doesn't have a long lifeline to you, right? So that is a huge problem. So when we don't have the success with the wind and solar or whatever they want us to have, then we go back to these things, and this big marijuana company, which is now big oil, which can't get any respect from any other industries, we're in trouble because it's just not there.
Yeah. I mean, you're absolutely right. And there's I think great opportunity though, and that's what my job is how can I make money in these markets? And we've been extremely overweight energy at Blue Line Capital, our wealth manager and portfolio manager. I mean, everything from owning individual names like Chevron making a new record high today.
Right.
Yesterday, Pioneer back tested a trend line support, and it's up about 10% off of that. We own that. Marathon Petroleum is another. We have very heavy midstream exposure to offset inflation within portfolios. We're very overweight energy, and I think you're going to start to see portfolio managers wake up to that. I mean, energy was shunned because it just lost money for the last decade, basically. But you're starting to see these energy companies, what they've done is coming out of the pandemic, they've cut their costs, they've raised cash, they've reaffirmed their dividend, and now that you got some really great companies that are being tethered to $60, $65 crude. Imagine you have $100 crude oil. This is really, I mean, these are such great investments right now. And then you're gonna have portfolio managers and those hedge funds you're talking about. Well, their clients are gonna wake up and say, why don't we own anything in the best performing sector for 2 years in a row now? So that's what you're gonna see. Then you have this massive tailwind of buying. I mean, I think Chevron could be breaking out here by the middle of the year, of course, and Pioneer's already broken out of a downtrend. So there's some really great investments within that. And then, on top of that, just the underlying crude oil futures, which we do at Blue Line Futures. I mean, there's just great strategies you can take advantage of upside there too.
You make so much sense. It's dangerous. I totally agree with you. And to put a cap on it, one of our presidents said, and I don't know if it was the last one or not, but I do know, but it was a pun actually. Energy is power, right? And that's the bottom line. And cheap energy gives you a lot of power. So really appreciate you being on the show today. Thank you, Bill Baruch from Blue Line Futures in Chicago. That's been fantastic stuff.